This is Alan Bush with ADMIS. In the stock index futures, we are seeing prices higher. This due to reports that there is progress in the Senate as far as averting the shutdown of the U.S. government and a debt default. Also, we are seeing some gains linked to a better overall feeling as far as the U.S. economy once we do get this situation resolved. Don't forget that the Fed's quantitative easing program remains in place, and most likely they will not be tapering their asset purchase plan until well into next year. So this is a bit of a change in from what people had been thinking over the last several months. So expect QE to continue well into 2014. Over in the foreign currencies, we're seeing the euro currency coming under some pressure, even though we did have some better news from Germany as far as the investor confidence index that is closely watched there. Also the pound lower, even though inflation in the UK had increased more than anticipated. Also, house prices also advancing more than analysts were expecting. Normally this would be bullish for the pound. However, we are seeing pressure in the British pound as a result of what's going on in Washington, which is dominating all of the financial markets, including the currencies. So the dollar index gaining for that reason, with this apparent progress that we are seeing in the Senate. Longer term, we feel, though, that interest rates in the U.S. will remain low, and the Fed will continue to push down interest rates as long as they can. This, of course, is bearish for the U.S. dollar from an interest rate differential point of view. So I would focus on the short side of the dollar index, especially after we get past this budget situation. And in the interest rate markets, we are seeing somewhat higher prices. We do feel that the main trend is lower, and the main trend will probably resume once we do get a more concrete agreement from Congress as far as the debt situation is concerned and the partial government shutdown. So for right now, I think I'd stand aside, but the long-term trend still appears to be lower for the interest rate futures markets. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.